Okay, let's unpack this. We're taking a deep dive today into BANPU Public Company Limited, BANMPU.
Right.
Now, this company, it's a major energy player. You see them across the Asia Pacific, the U.S. too. And what's really interesting is just how versatile they are.
Yeah, they're into everything. Natural gas, mining, the traditional stuff, but also power, renewables, even energy tech.
Exactly. So our mission here, using the sources we've got, company announcements, analyst reports, recent performance numbers, is to sift through it all and really get a handle on BANPU's strategy.
Where they're heading, especially looking towards, say, 2025 and what comes after.
It feels like they're right in the thick of this big energy transition, trying to become, what do they call it, greener and smarter.
That's the phrase they use. And
Yeah.
the sort of blueprint for that is their energy symphonics strategy.
The energy symphonics, okay.
Yeah, think of it like they're trying to conduct this complex mix of energy businesses, old and new, aiming for that sustainable shift.
While still keeping the lights on affordably and reliably.
Exactly, balancing that energy trilemma, as they say.
Okay, energy symphonics. It's catchy. What's the core idea?
Synchronization, really. It's about a synchronized way to create these new sustainable energy solutions, meeting global demand, which is still going up, but also, looking after the planet.
Right, square in that circle. And this strategy, it has four key missions, right?
Yeah.
Make it all work.
Yes, four main pillars. First one, maybe the biggest, is net zero by 2050 and decarbonization.
Okay, ambitious.
Yeah, and they've got specific targets, like at least a 20% cut in greenhouse gas emissions by 2030, and crucially, getting coal earnings below 50% of their total EBITDA by 2032.
Wow, okay, so that's a clear climate goal and a pretty significant shift in their business mix fairly soon. What's mission number 2?
Second one is focused mainly on the U.S. It's this gas power CCUS integration.
Carbon capture.
Right, carbon capture, utilization, and storage. They see combining gas production, using it in their power plants, and capturing the emissions. That's their winning formula over there.
Makes sense. Low carbon gas, cash flow.
That's the idea, controlling that whole chain.
Got it. And the third mission?
That's renewables plus, accelerating the push into renewables mostly in Asia Pacific.
And the plus? What's the plus?
Good question. It's not just solar panels and wind turbines. The plus is about things like battery energy storage systems, BESS, to handle, when the sun isn't shining.
Or the wind isn't blowing. Intermittency.
Exactly. And also using carbon credits strategically to make the projects work better financially.
Smart. Leveraging storage and carbon markets.
Yeah.
Okay, what's the fourth piece of this symphony?
Fourth is next-gen mining. Now, this is important because while they're saying no new investment in coal,
Explicitly.
they're focusing hard on optimizing the mines they already have, using smart tech, AI, digital tools,
To be more efficient, cut costs.
and reduce the environmental impact. But here's the really interesting bit. They're looking at investing in strategic minerals.
Like lithium, cobalt, stuff needed for batteries and renewables.
Precisely. The minerals that are upstream for the very greener tech they're building elsewhere in the company.
That's a clever pivot. Anticipating future needs from within their traditional side. Okay, this whole strategy, it must cost a fair bit. What are the investment plans?
They've laid it out. Overall, it's about $3 billion over the next 5-6 years.
Okay.
But for this year, 2025, the budget is $500 million.
And how's that $500 million being split? That tells you a lot.
It does. The biggest chunk, 60%, is going to gas and power projects.
Right, the U.S. focus in transitional power.
Then 20% goes to renewables. And the final 20% is for those new mining ventures.
Including that strategic minerals exploration, presumably.
Seems likely, yeah. That allocation really shows the immediate priorities.
Okay, let's dive a bit deeper then. How does this translate into actual goals for each business, starting with gas and CCUS in the U.S.?
Right. So in the U.S., the gas strategy is about growth, both upstream, getting the gas out, and midstream, the infrastructure. They've got a production target for 2025, 740 to 770 million cubic feet per day.
That's pretty specific.
It is. And the focus is efficiency, getting costs down, being smart with investment.
And that carbon capture part, the CCUS, sounds like a big piece of that winning formula you mentioned.
It really is. They're actively developing projects. Barnett Zero is already running, injecting CO2.
Already operational.
Yeah. And they've got 2 more big ones coming, Cotton Cove and Eagle Ford. Cotton Cove should start construction this summer, aiming for first injection in early 2026. Eagle Ford is targeting Q1 2026 for first injection too.
And the scale. What's the ultimate goal there?
Well, the individual projects have their specs, like, how many kilotons per year, but the big picture target is aiming for up to 16 million tons of CO2 equivalent capture capacity per year by the 2030s.
16 million tons. That's significant. And potential revenue from carbon credits, too.
That's part of the plan, yes. And their U.S. gas business itself has decarbonization targets. Carbon neutrality for Scope 1 and 2 upstream around 2025.
So, like, right now.
Pretty much. And net zero for Scope 3 upstream sometime in the 2030s.
Okay, let's switch over to mining. You said no new coal, but optimizing the existing assets.
That's the line from the sources. No new capital for coal. It's all about efficiency and cash flow from the current mines Indonesia, Australia, China.
And that cash flow is key, right?
Absolutely. They're pretty clear that the cash generated from this traditional side is meant to fund the growth in the greener and smarter areas.
Using the legacy business to fuel the transition. How are they optimizing, though? You mentioned AI.
Yeah, AI and digital tech, not just for more output, but also cutting costs and, importantly, reducing the environmental footprint of those mines.
Do we know the production targets for 2025?
We do. Roughly 21 to 22 million tons from Indonesia, just over 8 million tons from Australia, and 10 million tons from China.
Okay, and they're focusing growth in specific Indonesian mines.
Yes, the GPK and NPR mines were mentioned specifically for growth focus there.
And that strategic minerals angle.
Yeah.
How does that really fit in?
It's the next-gen part looking forward. It's not just random diversification. It's about potentially securing the raw materials, like you said, lithium, cobalt, whatever they identify needed for their own battery and renewable projects down the line.
Vertical integration almost.
Right.
Controlling the supply chain for the future stuff.
Could be. It's a strategic hedge, at least. Potential cost control.
Makes sense. Was there a specific mining update for Q1 2025?
Yeah, a small but notable one. Their Mongolia coal business started its first export to China, only 0.3 million tons, but it shows activity continues.
Gotcha. Okay, let's move to power. Where does that fit in the strategy?
Power is all about growing the greener portfolio. So more gas-fired plants, they see gas as transitional, but also a lot more renewables.
Is there a target for new gas power?
Yes, investing in an additional 1,500 megawatts, focusing on the U.S. and Asia-Pacific.
And we saw that with the Temple 2 acquisition in Texas, right? That fits perfectly.
Exactly. That's a prime example of the U.S. gas power integration. It creates synergies with their existing Temple plant, strengthens that whole value chain they're building with their gas production there.
Right. And the overall goal for total power capacity?
They're aiming for 6,100 megawatts by 2025.
Okay. And they still have that huge plant in Laos, Hongsa.
Oh, yeah. Hongsa is a massive baseload asset for them, almost 1,900 milliW capacity and a really long concession running through 2041.
How did the utility side do recently?
Q1 highlights showed profit gains, especially from their combined heat and power plants in China, partly seasonal demand, but also less maintenance downtime compared to the previous quarter, so a decent performance there.
All right, fourth segment, renewables and energy technology. This sounds like the real cutting edge of greener and smarter.
It definitely is. This is where a lot of the new investment is going, building up renewables and battery storage, mostly in Asia-Pacific.
Any specific projects to point to?
Yeah, quite a few mentioned. Like 3 BSS projects in Japan adding up to around 0.3 gigawatt hours. One of them, Uatono Battery Farm, is almost done, expected to start operating by Q2 this year, 2025.
So very soon.
Very soon. And they've also invested in a company called AMP Japan. That's to support a big pipeline, 800 milliW of solar and wind, aiming for a 2 GW platform there before 2030.
That's a big platform goal. What else happened in Q1?
Q1 saw them start building a 120 milliW solar project in China, Jinhu Qingfeng. Should be running by December 2025. In Japan, besides Iwad, they signed up for another BES project, Kamigumi Tokyo. That one's targeting 2028.
It sounds like it's more than just building big farms, though. There's tech and services, too.
Absolutely. They're expanding energy trading, using AI for optimization, which is interesting. Partnering up, that adds a smarter layer, right? Monetizing assets better.
Yeah.
And they've got a new joint venture in Vietnam for rooftop solar, specifically for industrial customers. That's tapping into distributed generation.
And e-mobility.
Yep. Launched something called Prime Mobility. It's a collaboration offering EV fleet management. So a pretty broad scope within this segment.
Definitely hitting multiple angles.
Mm-hmm.
What are the specific 2025 targets here?
They've got quite a list. For 2025, 500 milliW of solar rooftop and floating, a big target for batteries and ESS, 4 gigawatt hours, 60 smart cities and energy management projects, energy trading sales of 2,000 GWh a year. and expanding those e-mobility services.
Wow, okay. 4 gigawatt view of storage is quite something by 2025. Really shows the ambition.
It does. It's a major focus.
Let's shift now to the financials, how the market sees them. Q1 2025 results just came out. How did they look?
Well, the top line sales revenue was $1,284 million. EBITDA came in at $268 million. But they reported a net loss of $14.2 million for the quarter.
A loss. With over $1 billion in revenue, what happened there?
The sources point pretty clearly to unrealized foreign exchange losses. Basically, the Thai baht strengthened against the U.S. dollar during the quarter.
Currency fluctuations.
Exactly. It hit the value of their USD earnings and assets when translated back into baht for reporting. So it's largely a non-cash accounting thing hitting the bottom line.
Okay, that makes more sense. So, putting that aside, what are the analysts saying? What's the market view from the sources?
We looked at reports from UOB Kay Hian, Brulong, others. Across about 8 brokers, the consensus is basically holdy.
Oh, okay. Not a strong buy or sell.
Right. It breaks down as 2 buys, 4 holds, 2 sells. So kind of balanced, maybe leaning slightly cautious.
Any target prices for 2025?
Yeah. The range is between 4.00 baht on the low end and 6.00 baht on the high end. The average target is sitting around 4.94 baht.
So why the holdy? What are they waiting for or worried about?
The general expectation is for a recovery in the second half of 2025.
They're driven by
commodity prices, mostly. They're looking for rebounds in coal and natural gas prices. They see coal futures maybe getting back over $110 a ton. Gas prices bouncing back after Q2, helped by, lower U.S. inventories and seasonal demand picking up.
So the outlook is pretty tied to a bet on commodity price recovery later this year.
Seems to be a major factor, yeah. And the analysts think if that earnings recovery happens in the second half, it should support the stock price.
Anything else attractive?
They do mention the dividend. The analysts expect the strong cash flow from the coal and gas businesses, even while being optimized, could let BANPU maintain a dividend yield around 7%.
Which could appeal to income investors, I suppose.
That's the suggestion, yeah. Potentially attractive for that reason.
I did notice one report mentioned politics influencing the U.S. gas outlook.
Yes, that was in one of the analyst reports we saw. It stated that the outlook for the U.S. gas business over the next few years was, and I quote, supported by Trump's pro-fossil fuel policies.
Okay, so that's the analyst's view on a potential factor there. We're just reporting what the source said.
Exactly, just stating their rationale.
Navigating all this, the old assets, the new tech, volatile markets it must take, well, resilience. Does the company talk about that?
They do. The Q1 report specifically mentions the tough global environment, volatile energy markets, shaky economy, trade tensions.
The usual suspects.
Right. And they frame their response around championing resilience.
How do they define that? What does resilience mean for them?
They talk about agility, being quick to adapt, having this bold multi-platform strategy across different energy types, using their global footprint to manage risk and find opportunities, and being disciplined with their investments, risk manage.
And they tie this into ESG too.
Yep. It all falls under their Our Way in Energy approach, linking operations to ESG principles, environmental, social, governance, aiming for sustainable growth and value for everyone involved.
Okay, let's try and pull this all together then. Stepping back from the details, what are the key takeaways from this deep dive?
I think the main thing is that BANPU is seriously in transition. It's not just talk. They're putting real money, significant capital into new energy tech and generation, while still managing and funding from their traditional base.
And they have those clear, ambitious targets for 2025 and beyond. Decarbonization, capacity growth.
Definitely. And while the recent financials showed that currency-driven loss, the analysts are looking for that second-half recovery based on market conditions. And that strong cash flow from the core businesses, potentially supporting the dividend, is a key part of the story, too.
It really is a fascinating balancing act, isn't it? A company rooted in resources, making this very deliberate, strategic pivot towards generation and tech, all under that Energy Symphonics banner.
And using tools like AI and CCUS, not just for the new stuff, but to make the existing operations more efficient and less impactful. That's quite telling.
Yeah, it shows a complexity. It's not just flicking a switch from fossil fuels to renewables overnight.
No, it's about transforming the existing system while building the new one, often using one to finance the other.
So here's the final thought then. When you look at BANPU, with this investment spread across traditional resources like coal and gas, huge power plants, and these cutting-edge distributed energy and battery solutions, how might the sort of interplay between all these different parts, the coal cash funding solar, the strategic minerals potentially feeding batteries, the gas plus CCUS providing transition power. How might that actually shape the energy transition in the places they operate? And maybe, what does watching a company like BANPU, with its feet planted in both the old and new energy worlds, tell you about the real-world challenges and strategies involved in making this global energy shift actually happen?